All right, this is your July market update for Huntington Beach. Our high we were riding with our median sale price hitting the highest of all time at $1.305 million was short-lived. We came back down to earth. Median sale price now in Huntington Beach for the month of July was $1.25 million. So we saw essentially a little over a 4% decrease in pricing. And that was while interest rates were decreasing. The only thing that I can say is that we had more units sold. So I think this has been a reflection more of a supply and inventory issue than it has been an interest rate issue. Now, last Friday, we did have our interest rates drop to the lowest point they had since May of 2023, which is something you're going to hear a lot of lenders and a lot of realtors talking about. I took the liberty to go and average out the rates over the past month and then looked at the average rates in May of 2023, and we're still roughly a quarter point above where we were. So although rates, yes, did drop, and for that week ending, which ended on Friday when the stock market had a little hiccup, the rates that day when Freddie Mac and Fannie Mae take their rate samples, it happened to be on a bad day. It's probably rebounded since then, and so still on average, we are a little bit higher than where we were, at least over the past year. And so until we can see rates stay low a little bit more consistently, I don't think it's going to reflect as much as far as affordability and purchasing power goes. But at the same time, this is something I mentioned last week or last month. I don't remember. As long as the supply is increasing while rates are decreasing, those two things are going to balance each other out. So we're not going to see any significant changes as far as what the market's doing. So my update to you, very short and sweet, everything's maintaining stability. I've had a few homes sold over the last couple weeks that previously were sitting, so obviously there's some incentive that buyers are seeing. Maybe they anticipate the rates are going to continue to drop, which is leading them to beat the rush, so to speak. But again, until we see this being held for a little bit longer period of time, I don't think we're going to see any major changes in the real estate market. Now, usually coming into election years, people do tend to be a little bit more trepidatious, and you're going to see people pump the brakes and have a little bit harder time pulling the trigger and making decisions, which rightfully so. But at the same time, I remember being in the market when Obama was elected, and everyone's like, oh, if Obama's elected, country's going to suck, I'm moving to Canada. And then when Trump was elected, oh, if Trump's president, I'm going to move to Canada, everything's going to explode and go to hell. And both times, the real estate market just kept doing what it did. And so if you got out of the market during that time, regardless of what side of the political spectrum you're on, you lost. So hang tight. If you own a home, chill. Wait to see what's going to happen. I'm sure January we will be doing what we typically do in coastal cities, and that's going to be the beginning of a market where you're going to start seeing increased, probably, reflected sale price in February moving on to the summertime until things start hedging back a little in November and December like they always do around here. If you have any questions, feel free, DM, drop a comment below, and I'll try to get back to you. But that is your short market update for the month of July.